I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with Greg Powell, Certified Investment Management Analyst and President and CEO of Five Plan Partners.
Rolling in 3, 2.
Welcome to Investors Insights for September 8th, 2014. I would still like feedback on our changed format that is shorter and more concise. So let me know what you think about it. You can email me at gpowell@fiveplanpartners.com or use the space provided on our blog. So let's talk now about what's going on in the economy. I need to start off by just acknowledging that this week we will have a moment of silence in memory of those of September 11th. We never want to forget that day, a day in which people died, in which our country felt great pain, and in which the world was impacted all over the globe. I especially remember the markets being closed that week. I remember having colleagues in the World Trade Towers. And this is always a week that just is very sacred to me. Also, from the standpoint, for those of you who have ever visited our offices, you know that we have a section where we remember those that died that day on 9/11, and also about the history that has taken place there. We can never forget that moment. And how ironic, as I talk about this, with all that's going on in the world now. Yes, we're still dealing with Russia, and there's NATO talks going on. We also are dealing with ISIS and the Islam State and what's taking on in the Mideast. But on another note, it's interesting to point out that the S&P 500 index has hit its 33rd record high close on Friday. This also came after we found out about the jobs report. We had 142,000 new jobs reported, and you would think, wow, that's great, but the reality is we were expecting 225,000 jobs. So jobs have not picked up yet, which gave the hope, and that's why the market showed a lot of strength, the hope that the Fed was not going to raise rates anytime soon. There are those that are now forecasting that we might not see a rate increase until sometime second or third quarter of next year. At the same time, I want to point out to you that the 10-year Treasury is now yielding 2.46%. That started at the beginning of the year at 3%. So there were those that were forecasting as we began this year that the Fed would start to raise rates faster, and the reality is rates have actually come down. Keep that in mind. That's important to note. In addition to that, the Eurozone, which makes up over 20% of the world gross domestic product, is now starting to lower their rates. They also are starting to implement quantitative easing, just as we did in this country. How ironic that we're having a debate in the United States of rates and when they will go up, and Europe is now lowering their rates because their economies are not picking up. And so they are trying now to use some of the exact same strategies that we used here in the United States. The jury's still out on that. At the same time, you need to be aware of the fact that here we are in September, and in a few weeks we hit the month of October. Janet Yellen and the rest of the Fed has indicated that in October they will stop the quantitative easing, putting more money into the system. Knowing that, there are those, and this is where the two camps are and we're watching closely, as well as the overall global impact. The two camps are that once quantitative easing stops, the stock market may start having a correction. Nothing just unbelievable, but there are those that believe as rates move up, stocks will not be as strong. The other side of it is there are those that believe 2008, as we all know, took the wind out of our economy, and that's an understatement, but that it's like a balloon that has been blown up and that it's been pushed down underwater, and that 2008 period to current period was really a distortion in the overall economy, and that now by releasing the balloon, letting businesses really crank up, borrow money at cheaper rates, expansion is occurring, technology is keeping costs down, that we could see the S&P 500, which is at 2007 right now, go a lot higher. They also are looking at the NASDAQ and the Dow Jones Industrial Average because that we're in the early stages of what they're calling a U.S. economic expansion. Interesting thought process, especially when you tie in the fact we're becoming so strong in energy. So here at Five Plan Partners, we are watching these scenarios very closely to see how they could impact your portfolio. We are watching on a day-to-day and week-by-week basis to see which trends are starting to piece themselves together to give us indications. Are we going to go higher, or are we looking at that correction in October? And we're going to be keeping you updated in the process. For those of you watching this vlog, or those of you listening on our podcast, if you're not having this kind of dialogue on watching the trends with your current financial advisor, then we need to be having conversations with you. Those of you that are clients know that we're going to stay on top of this and that we're going to keep you updated as things start to evolve. So with that in mind, we loved the feedback last week of our new format. We love the fact that people continue to forward it and also have dialogue with us. Our philosophy here at Five Plan Partners is we want debate. We want to be able to look at all scenarios, debate them, because that helps us get closer to the right answer. Thanks for joining me, and I hope this has been worth your time.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.